Hi guys, it's Jess here, also known as SlickShortCake on Instagram. I am a beginner intermediate level trader who's really just here on YouTube trying to share my story. Up until now, I've used Instagram stories to share my trading journey, and I just found that that was getting a little bit long to make up a real detailed set of stories on a daily or weekly basis, recording my every thought and move within the oil market. So I just thought that going forward, it'd be more efficient and better for everybody just to have a snapshot of the market and what happened throughout the course of the month, and then also how I maneuvered my way through the market that month. So that's the format I'm going to use. Two charts. One is the fundamental chart to show the market activity, and the second chart is the trades that I took. So with that being said, this is the fundamental chart. I'm just going to make a very quick disclaimer and say that all the information that you see here, this isn't something that I've just made up. This has all been taken and extracted from TradingView. The information is there for everybody to see and look at. And the information comes from a variety of different analysts from institution and companies such as Bloomberg, Reuters, Wall Street Journal, to name a few. And also this video isn't intended to educate in any way. So even though I am showing you these fundamentals and how I record them and what that looks like for oil price, this video is really just to show my trading journey and not to educate you about fundamentals. And I would highly recommend just getting yourself on TradingView. If you are interested in learning fundamentals, it's there in the news section of the chart on pretty much every market. However, if you do want to screenshot this here, this information, if you're interested in learning, and you're welcome to ask questions as well. So this is the fundamental chart for the month of September. I've actually listed the main areas of resistance and the main areas of fundamental support, because I could literally be here for hours talking about these individual news factors and what they mean for price. So let's start from the TOP with resistance. Resistance was formed by these bearish news factors, which created resistance or pushed price down. The first one is Chinese oil demand. Now, China is the top global importer of oil, and they've got various sectors within their economy which use oil. So house building, manufacturing, industrial sectors. And if those sectors within their economy show decline and no future growth, then that means the demand for oil is softer. That means China will be importing less oil into the country from mainly the Middle East going forward, bringing price down. So that's very much Chinese demand in a nutshell. It's a huge topic. Moving on to energy agencies, and they have revised their global forecast for the rest of 24 and 25 downwards. So they believe, the energy agencies believe, that demand will be softer, and therefore price will go down. So the energy agencies consist of three organisations: EIA, the IEA, and OPEC. OPEC are essentially the oil cartel. They're the ones that actually pump the majority of the world's oil out of the ground, that have the market share. But the three guys as a whole, those three organisations will basically dictate the price of oil based on supply and demand forecasts, and also how much OPEC are actually bringing out of the ground. So if OPEC bring more out of the ground, that means there's more supply into the market and price will go down. So moving on to OPEC, the Organisation of Petroleum Exporting Countries. Check them out on Wikipedia or Google, see who they are, how much oil they bring to the market as a collective. I'm a geek and I find it super interesting, but I appreciate not everybody will. And currently for this year, OPEC have actually withdrawn about 2.2 million barrels of oil from the market and supply, mainly because of oversupply. But come December, and because they want their market share back, they are going to start introducing and drip feeding about 200,000 barrels per day back into the oil market. More oil on the market, price comes down. So I kind of hope that explains very quickly a little bit of the supply and demand side for these bearish factors. And now I'm going to move on to the bullish factors at the bottom here. And these are the factors that provided a level of support or pushed price up over the course of the last month. And I really do feel that these bearish and bullish factors were in quite a big battle this month. So the Middle East, I don't really need to explain too much about the Middle East. Obviously, most people are aware that there's been escalations and the overall threat of war in the whole region. And a lot of the OPEC countries are in the Middle East. So, you can understand why war could potentially ruin supply there. However, it is worth noting that the Middle East actually already has a $5 risk premium on it at the moment. So if there was no conflict in the Middle East, the price of oil would be $5 less per barrel. I hope that makes sense. Moving on to Libya, reduced supply. Libya is an OPEC country, and down to political reasons and issues within Libya at the moment, there's protests at the oil fields, and there's been less oil extracted, less output in terms of exports. Again, less oil on the market, price goes up. All provide support. Hurricanes in the Gulf of Mexico, they're obviously threatening supply to that region. There's lots of rigs, drilling platforms in the Gulf of Mexico, and any bad weather or disruption because of hurricanes, less oil on the market, price goes up. So in a nutshell, that's how it affects the market. Like I said, I could go into much more detail here, but I'd rather keep it brief than waffle. We had a Fed rate cut in the kind of middle of the month, and that didn't really move price too much. That was the first Fed interest rate cut for 4 years. But Chinese demand has been pushing things down over and over again. And I know I'm going to sound like a broken record throughout this video. Chinese demand, Chinese demand, Chinese demand. But it really, really was the overriding bearish factor. For any time price wanted to come back up, Chinese demand would just slap it back down to an area of support. Okay, so that's how the month looked. We started on 73.56. We closed the month on 68.80, which was an overall decline of 4.76%, or just under $5. And then everything changed in October. So I'm now going to move on to my second chart, which is my trade chart. And this looks slightly different. Again, I've broken it down into weeks, but this is where it gets sketchy. But really, I'm just going to mainly focus on week one, because that's where the majority of the action happened in terms of my psychology, in terms of the actual trades, in terms of lot sizes, in terms of everything. And unfortunately, it really did set the tone for the rest of the month as well. And it is quite painful to come onto this video and say I had a shit month, because July and August are pretty good for me. And although it hurts and it's awkward to kind of say I had a bad month and to tell you in more detail about that, at the same time, I kind of enjoy it, because it shows me as a really realistic trader on a real month going through what a lot of traders going through. So I'm learning the classic trader lessons, and I'm happy to learn them, to be quite honest. So let's stop waffling and go through what actually happened here. So this is week one. As you can see, it was predominantly bearish. I recorded the news on Monday, predominantly bearish. I knew that Chinese demand had been battering down any bullish news for weeks on end. I've seen it happen time and time again for weeks on end. And yeah, the trend is my friend. That's rule number one. The trend is your friend. But I seem to forget that. That went out the window this week. So even though all of this bearish influence was there, I still went in for a buy. Here and here, I took several trades here and several trades here. Obviously, they didn't work out, as you can see. Might have come up for a little while, beaten back down. Might have come up for a little while, beaten back down. Mainly by Chinese demand. There it is again. So Why did I take these buys? Why was I so keen to catch the reversal? I was trying to catch a falling knife, and that's a term that I've learned from Preston, Mr. to the P. Hi, Preston, if you watch him. Um, so I think psychologically, since January of this year, my first ever trade idea was the reversal buy at 70. So for the last 8 months, all my levels, all my action has taken place in between $70 and $90, actually $87. So that's a $17 range. I had all my levels marked up between 70 and 80. Everything was focused on those areas. I hadn't been into the 60s before. And quite frankly, I didn't think it was going to come back down there because I wasn't confident in that area. I didn't know what we were capable of. And do OPEC really? I was thinking all these things. The Middle East is going around my head. The $5 risk premium. Do OPEC really want it to come down into the 60s? No. I was just thinking of all these crazy that go around in my head. Technically, I kind of liked where I took the trades. Um, but yeah, I was beaten back down. And I'm not too sad about that because the market won't do what I want it to do. It I didn't feel disrespected by the market in any way. Um, I think what the crusher of this week was is that this was the week that I decided to use bigger lot sizes because in July and August I was picking out some cracking entries and potentially making lots of profit. Um, and I kind of had that confidence going into September. So I started using bigger lot sizes on a failing week. So where I was maybe using up to 0.05 lot before, I was now using 0.08 or zero point 0.1. So essentially doubling my risk on every trade. That was the worst move ever. Maybe in a great week, brilliant, but not in a losing week. And I lost about 130 quid, which for me is a lot of money. My people will know that I keep my risk fairly small, come out of trades really quickly. And this week it all just went completely out the window. My discipline, my greed. Yeah, but it was an interesting week. And I learned a lot. So I'm just going to slide on into week two. I didn't take any trades because I was butthurt about the amount of money I lost the week before. Not butthurt at the market, butthurt at my own actions. I needed a week off to reflect and analyze, readjust. Filling in my profit and loss for the week before was painful. It hurt me. And I knew that I still recorded my news and I still did all my daily habits and actions. But I just knew that getting back into trading the following week, I really had to like sort out my mindset and be like, you can do this, you've got this. It was just a blip. Come on, you need to like tackle week three as if you just had your biggest winning week. That attitude, that mindset. So went into week three. I didn't really do much because I was waiting for 72.50. I was still convinced that good old Chinese demand will come back in and slap price back down as I've watched it do week and week and week before. Why did I pick 72.50? The only reason, the biggest reason why I chose that area is because I felt it was a historic area of price action, so an area of support and resistance. And the reason why I felt that is because back in January, going back to January again, I watched 72.50 get touched on the half-hour time frame 123 times throughout the course of the month. And that's because back in January, I was very much a beginner into the oil market. I was looking for patterns to cling on to work with. And that's one of the patterns that I remember looking at. So that's why I chose 72.50. How did the trade work out? Okay, I took lower risk in this week. A little bit burnt, obviously. I thought, right, let's just go back to my normal lot sizes. 0.3, nice and safe. The trade worked out initially. A little bit of break-even action there, creating quite a solid wall though of resistance. It dropped back down. But then this little bullish move here, Middle East tension, Fed rate cut overs really from the week before, and China trying to stimulate a bit of growth in their economy, took me back out. At 73.17, But I was not deterred. I felt news was bearish still going on sort of throughout the week 4. Took another trade at 71.80 that actually played out really, really nicely into week 5, or actually it was only really Monday. And it was all playing out nicely into October. Iran started firing missiles at Israel, price shot up and into October. So that's a snapshot of what happened. I would have liked to have made a bit of profit here, just to make the month a little bit more bearable and less of a loss than how it started. But unfortunately, that wasn't meant to be. I got taken out of break even. I can't be watching the market all the time. I have notifications coming up on my phone from Al Jazeera, from Reuters, so I can kind of, while I'm at work, while I'm out and about doing other things, that I can sort of like keep on top of and exit trades or make a decision on the move. But I can't catch every single piece of news and I can't catch every move in the market. So even though I started off being taught technicals and charting by Mr. P, big up you if you're still watching, my strategy is essentially 75% fundamental and 25 technicals. I actually quite like my technical entries for this month. Wasn't too much wrong with them, but still always room for improvement. Because I'm 75% fundamental based, and that's a strategy that I want to continue with, I just want to say a massive shout out to Abex Adam, board and caffeinated day trader, and Scott Burgess, because I project my fundamental ideas and thoughts onto them, whether they want it or not, whether they like it or not. They just have to get my spoutings and my pourings of my thoughts. So yeah, I just wanted to mention them because they've been a big part in this journey too. So going forward, as a kind of like summary of September and then what I want to achieve going forward in October. Even though I had a good July and August, I needed to be slapped back down and have some lessons, because it's unrealistic to think for a trader with only 2 years experience, I'm only 2 years and 2 months into my trading journey. I need lessons still. And realistically, I will be getting lessons regularly. It's how I deal with those lessons going forward. Things like getting back on the horse after a shit week and things like that. I'm proud of myself. A lot of people would give up at certain stages. But for me, it's just, like I said, the market doesn't respect me. It just highlights where I need to do more work. So going forward into October, I am going to try and be more focused on being a short-term day trader. I am good at catching entries. It's my management and my exits, which are the nemesis of my trading and actually making any profit from this market. So I'm going to stop trying to be a wannabe swing trader in this market with this level of support and resistance, with this level of supply and demand and how volatile and how quickly things change in this auto market. I need to readjust myself into day trading, and I'm sure there's many people who know what they're talking about that would probably agree with that. Stay away from swings, Skinsy. Day trades is your way forward for October, so it'd be really cool to come back to this video in a month's time and update you with more profitable short-term trades rather than a load of failed swing attempts. So news bias, exits, greed, that's what I've got to work on. I'm happy with my determination, my consistency, my ability to read fundamentals and record them in a way that makes sense to me. I'm only two years, 2 months in. So my progress, I feel, is good, because I look at people who started at the same time as me and they are still taking copy and paste trades from signals. And not having any of their own ideas. So the fact that I can use fundamentals, charts, and execute and show profit or loss, I feel is great progress for somebody of my level. Okay, so I'm going to be closing up this, ending the video soon, but I just felt that I wanted to give my take on the fundamentals of the market in October. It'll be really interesting to see how things plan out. But I feel that the Middle East and Chinese demand will be the biggest battlers this month, as with this month. Um, while Iran's disrupted supply of 3 million barrels per day isn't disrupted, I don't feel that oil is going to go much higher than, it's certainly not going to break 80. If Chinese demand is still in play, it certainly won't break 80. But if China do release some data over the next sort of few months, which show consecutive growth in the sectors that I mentioned earlier, then I think price has the potential to push right out into the 80s. But those two things, I think, are the things which are pushing price back down or keeping resistance on the price of oil, creating downward pressure. So, yeah, it's interesting to see what happens going forward. Like I said before, I'm a huge geek. I spend my whole life literally thinking about this stuff. Um, so yeah, I hope you enjoyed the video. I hope you made sense of the video. If you made it to the end, then fair play to you. You're welcome to leave some dollar emojis in the comments to let me know you made it to the end. And I look forward to catching up with you next month. Peace out.